Welcome back, everyone. We're diving into a really fascinating approach to investing today. It's called Dhandho investing,
Dhandho. Yeah.
and it's all about, well, the idea is to build wealth, but with as little risk as possible.
Right.
So if you're like me and thinking long term and wanting to be smart about your investments, this is definitely something you'll want to hear about.
It's definitely a very different way of thinking about investing. Kind of goes against a lot of that Wall Street,
Yeah, that get rich
get
quick.
rich quick
Yeah,
mindset.
exactly.
Yeah.
So we're going to base this deep dive
Mhm.
on Mohnish Pabrai's book. It's called The Dhandho Investor.
Great book.
And we're also going to be pulling some insights from a podcast episode
Hmm.
where they actually interview
Yeah, practitioner.
a practitioner of Dhandho investing.
Yeah.
So you get like the theory,
Right.
and then you get someone actually doing it.
Exactly.
So let's maybe before we jump into all the details, what is Dhandho, like in a nutshell?
So Dhandho, basically, it's an investment philosophy, really, and it's inspired by this community. You might have heard of them, the Patel community.
Oh yeah,
They're known for, well, they came to the U.S. with very little,
Yeah.
and they ended up owning like a huge chunk of the motel industry.
yeah, it's an incredible story.
It's a really amazing story, and their whole approach is all about low risk and high return. Getting the most bang for your buck while keeping things safe.
That's the dream, right?
Yeah, exactly.
So low risk, high return.
Yeah. The book actually defines it as the endeavor to create wealth with minimal risk.
Oh, I like that.
It's pretty compelling idea.
Oh, absolutely. And like you said, the Patels are such a great example of how this can actually play out.
Right.
It's not just theory.
Yeah.
It's like real people making it happen.
Yeah. What's really cool about their story is, so they came to the U.S. in the 1970s.
Yeah.
And this was during a recession.
Yeah.
Which, most people would think that's the worst possible time to start a business.
Yeah, you'd think, right?
Yeah. But they totally flipped the script. They saw it as a huge opportunity.
That's really remarkable.
Yeah.
To kind of have that mindset.
Yeah. What they did was, and this is really interesting, they didn't rely on these, complicated financial models or
Yeah.
like insider information or anything like that. Their approach was surprisingly simple. They focused on buying these motels that were struggling
Oh, okay.
at like super bargain prices.
Oh, wow.
And then they ran them really efficiently. A lot of family labor.
Oh, okay.
Yeah. So they really kept costs low and yeah.
Yeah, that makes sense.
Yeah.
I remember the book talks about this guy, Papa Patel,
Yeah.
they call him, and he bought a motel
Mm-hmm.
for just $5,000. Like that's crazy.
Right. That's less than some people spend on like, a vacation.
Seriously.
Yeah.
And it just shows you this whole Dhandho mindset.
Right.
Instead of being afraid of an industry that's struggling, he saw like, hey, this is a chance
An opportunity.
to get in at a really good price.
And the potential return was insane.
Yeah, what was it, like 400% a year or something?
Yeah, something like that. It was huge.
Wild. But I mean, even if things didn't work out,
Right.
his downside was pretty limited.
Yeah, the Patels were really known for their work ethic.
Yeah.
And they could easily buy another motel.
Right. They could just go get another one.
Yeah. So it was kind of like a win-win situation.
Yeah.
Really.
Heads I win, tails I win.
Pretty much.
Yeah.
The odds were really stacked in his favor.
That's brilliant.
Yeah, and that's really what Dhandho is all about.
Mm-hmm.
Minimizing risk and maximizing return.
Yeah. And the book actually lays out like 9 key principles that kind of guide this approach.
Yes.
We're going to kind of unpack those.
Definitely.
But before we do, there's this really cool real-world example from the Dhandho Investor podcast that I wanted to touch on.
Oh, yeah.
They talk about this guy,
Yeah.
Manal Chaudhuri.
Yeah, Manila, he's actually related to the Patels.
Oh, wow.
And he really embodies this whole Dhandho spirit. He started out just working at a gas station,
Okay.
but he ended up, using this Patel model. He bought and ran a bunch of successful motels.
Wow.
Yeah, and what's really interesting about him is he didn't come from like a finance background or anything. He understood the business
He knew the business.
inside and out. Yeah.
And that's really the first Dhandho principle in action.
Yeah. Invest in businesses you understand.
Yeah.
Keep it simple.
Keep it simple.
Yeah.
Stick to what you know.
Exactly. You don't need to be some, Wall Street hotshot
Yeah.
to be a successful Dhandho investor. In fact, a lot of times complexity is kind of the enemy. The more complex a business is, the harder it is to really figure out.
Understand.
Yeah.
Yeah, and I think the Patels also show us that second Dhandho principle, the look for distressed businesses.
Yes. In distressed industries.
Yeah. They didn't just buy any motel. They bought motels when the whole industry
Was down. Yeah.
Yeah.
They were buying properties for a fraction of what they were really worth.
Yeah. So that's a key part of Dhandho, right?
Yeah. It's about not being afraid of downturns, but seeing them as opportunities.
Yeah.
Like when an industry is in distress, there's less competition.
Right.
And you can find some really amazing deals.
Like bargain hunting, but for businesses.
Exactly.
Okay, so we've got invest in simple businesses you understand, look for distressed businesses in distressed industries. And then there's the third principle, focus on companies with a durable competitive advantage.
Right.
And they call this a moat. What exactly is a moat in the business world?
So imagine like a castle, right?
Okay.
And it's got this deep, wide moat around it.
Yeah.
That moat makes it super hard for anyone to attack.
Yeah, makes sense.
So in business, a moat is anything that gives a company like a big advantage over its competitors, and it protects their profits.
Okay, so what are some examples of moats?
A strong brand reputation is a big one.
Okay.
Like think about companies like Apple, Nike. They can charge higher prices because people love their brand.
Yeah, they're willing to pay more for it.
Exactly.
Cool.
Another moat is having a unique product or service.
Oh, okay.
Something that's like really hard to copy.
Yeah.
The book actually uses Chipotle as an example.
Right, right.
Yeah, so Chipotle, their thing is fresh ingredients, right?
Yeah.
And that customizable menu. And they've built this like loyal following who are totally willing to pay more for their burritos.
Yeah, I'm one of them. I'm definitely part of that following.
Right, so they've created this moat based on quality, customer experience, and just like their whole brand identity.
Yeah, and that moat basically translates into higher profits.
Right.
And it makes the business more resilient.
Exactly.
So principle number 4. This one's might be a little more intimidating.
Sounds complicated.
Yeah, it's called bet heavily when the odds are overwhelmingly in your favor.
Yeah.
And they actually have a formula for this.
Yeah.
The Kelly formula.
The Kelly formula.
Now, I'm not a math whiz, so.
It sounds a lot more complicated than it really is.
Okay, good.
Basically, the Kelly formula helps you figure out how much to invest.
Okay.
Based on like how likely you are to win and the potential payoff.
So it's like it's assessing the risk.
Yes.
And the potential reward.
Exactly.
And saying, okay, based on that, this is how much you should invest.
Right. It's all about maximizing your gains.
Yeah.
While also minimizing your potential losses.
Okay. So can you give us like a real world example of how this Kelly formula works?
Sure. Let's say you found an investment opportunity, right? And you think there's like a 70% chance you'll double your money.
Okay.
But there's also a 30% chance you'll lose half of it.
Okay. So it's risky, but
there's a good chance of a big payoff.
Yeah.
The Kelly formula would tell you to invest 40% of your capital in this opportunity.
Oh, okay. So it's not just like throw all your money in.
Yeah.
It's like it actually gives you
a calculated amount.
Yeah, like a specific percentage. Okay.
Yeah.
Interesting.
It takes the guesswork out of it.
It does. It does. Okay, so principle number 5. Mimic, don't invent.
Mimic, don't invent.
Now this one's kind of interesting because it seems to go against like everything we hear about, disruption and innovation.
Especially in the tech world.
Yeah.
Yeah.
It's like everyone's trying to be the next big thing. But Dhandho is saying, hey, maybe you don't need to reinvent the wheel.
Yeah. Dhandho is more about learning from people who are already successful and kind of copying their strategies instead of trying to come up with something completely new.
Makes sense.
Okay.
And actually, the book uses Microsoft as an example of a company that's done this really well.
Yeah, it's funny, right? Because we think of Microsoft as like this innovative company.
Yeah.
But a lot of their success came from taking existing ideas and making them better.
Oh, interesting.
Like they didn't invent the graphical user interface.
Right.
But they perfected it with Windows.
Yeah.
So it's not about being like the first one to do something. It's about doing it really well.
Yeah.
And learning from the people who came before you.
Yeah. There's no shame in learning from the best, right?
Exactly. It's a smart strategy.
It is.
Yeah.
It is. Okay. So lots to think about already.
Yeah.
So what's the next Dhandho principle on our list?
All right. Well, this next one dives into something really important. The psychology of investing. You know, how our emotions can really mess things up sometimes.
Oh, yeah. Yeah. I'm really curious about this one because, I mean, I know how easy it is to let, like, fear or greed
Oh, absolutely.
take over when it comes to money.
Right. Dhandho really emphasizes this idea of, like, emotional detachment.
Okay.
And patience, which, let's be honest, that's really hard when the market's all over the place.
Yeah, it is.
But it's all about making decisions based on, you know, logic and analysis, not letting your emotions,
Right.
like fear or greed, kind of hijack your brain.
So how do you actually do that, though?
Right.
Like, how do you achieve that emotional detachment? It's easier said than done.
It definitely takes practice.
Yeah.
And I think one of the key things to understand is that the market is often irrational.
Oh, yeah. It definitely feels that way sometimes.
It really does. It's driven by this like herd mentality,
Yep.
you know, speculation, short-term thinking. And that creates these wild swings
Yeah.
that have nothing to do with a company's real value.
So how do you avoid getting caught up in that frenzy?
So Dhandho encourages you to kind of tune out the noise.
Okay.
Focus on the fundamentals of the businesses, not the day-to-day
Yeah.
ups and downs of the market. You got to understand the intrinsic value of a company.
Right.
Like, what are their earnings, their assets, their long-term potential?
Got it. So look beyond the hype.
Exactly. And the book uses this really cool analogy. It talks about the Chakravarti battle formation,
Right,
like
yeah.
from the Mahabharata. It's the spiral formation
Yeah.
designed to trap and confuse opponents.
Right.
So Dhandho teaches you to enter the market strategically
Right.
when the odds are in your favor.
Mm.
Stay focused amidst all the chaos.
Right.
And most importantly, know when to exit.
Know when to get out.
Gracefully.
Okay. So it's all about having a plan
Yeah.
and sticking to it.
Right. Don't let yourself get swept away by the market's emotions.
Yeah. Okay. Now this next principle, it's kind of a head scratcher for me.
It's a bit counterintuitive.
Yeah, it is. It's seek out low risk, high uncertainty businesses.
Yes.
So how can a business be low risk and highly uncertain at the same time?
That's a great question. And it really comes down to understanding the difference between risk and uncertainty.
Okay.
Risk is something you can measure.
Okay.
You can quantify it, you can assess it.
Okay, so it's like there's a chance of losing money,
Right.
but you can kind of, figure out how much.
Yeah.
Uncertainty, on the other hand, is unknown.
Right.
Like you don't really know what's going to happen.
It's unpredictable.
Okay.
Yeah.
So Dhandho investors are comfortable with some level of the unknown.
Right. As long as they've, carefully assessed the risks
Yeah.
and they feel like the potential rewards
wait.
outweigh the risks. Yeah.
Okay. So they actually see uncertainty as an opportunity.
In a way, yes. Because uncertainty often leads to, like, mispricing in the market.
Oh, interesting.
Other investors might be afraid of businesses that are facing a lot of uncertainty.
Yeah.
But Dhandho investors, they see this as a chance to buy something that's undervalued.
That's a really interesting way to look at it.
Yeah.
Okay, this is really making me think about, how I view risk and opportunity in the market.
Mm-hmm.
It's like it's almost having the courage to bet on those businesses
Yeah.
that other people might shy away from.
Right. It's about being a little bit contrarian
Yeah.
and looking for value where other people don't see it. And remember, fear and greed,
Yeah.
those drive a lot of market behavior.
Yeah.
And the really successful Dhandho investors, like Warren Buffett,
Mm-hmm.
they're masters at exploiting those emotions.
The book talks about how Warren Buffett invested in American Express
Yes.
during the salad oil scandal.
The salad oil
That
scandal.
was back in the 1960s, right?
Yeah, the 60s.
Can you tell us a little more about that?
So American Express, they got caught up in this, like, massive scandal
Oh.
involving these fake warehouse receipts for salad oil.
Really? Salad oil.
Salad oil. It's a crazy story.
That's wild. So their stock must have just
Tanked.
Yeah.
Everybody panicked.
Yeah, could imagine.
But Buffett, he saw through all the chaos.
Okay.
He understood that the core business of American Express, the credit cards, the traveler's checks,
Yeah.
that was still incredibly strong.
Yeah.
He knew the market was overreacting.
Yeah.
And that created this opportunity to buy a fantastic company
Mm-hmm.
at a bargain price.
So he was like, everyone's running away. I'm gonna jump in.
Yeah, he made a bold bet.
He did.
And it ended up being one of his most successful investments.
Wow.
Yeah. And that really highlights another Dhandho principle. Focus on high returns on invested capital.
Okay, so return on invested capital. Break that down for me.
So it's basically how effectively a company uses its money to make a profit.
Okay.
The higher the return, the more efficient the company is.
So it's not just about making money. It's about
how well they use their resources.
Okay, got it.
Yeah.
Efficiency is key.
Exactly.
All right. So that brings us to the last Dhandho principle for today. Be a cloner, not an innovator.
Be a cloner.
Which again kind of goes against, the
Here's
whole
conventional wisdom.
Yeah, you got to be original and come up with a new idea.
Yeah.
But this is saying, hey, there's nothing wrong with
learning from the best.
Yeah.
Copying what works.
And how do you find these brilliant investors to clone?
The book recommends checking out some resources like Outstanding Investor Digest.
Okay.
Value Investor Insight. They feature interviews with successful investors.
Okay.
So you can learn from their strategies.
It's like having a mentor in a magazine.
Exactly. Another great one is the Value Investors Club website.
Okay.
It's a place where experienced investors share their ideas.
Oh, wow. And their research.
So these are like incredible tools for anyone who's looking to learn from the best.
Absolutely.
And apply it to their own investments.
Definitely.
All right. Well, we've covered all 9 Dhandho principles.
We have.
What are your thoughts so far?
I'm really liking this approach. It's very grounded.
Yeah.
And it's focused on building wealth over the long term.
Yeah, it's not about like the quick buck.
It's a different mindset.
It is. Okay, so what's next on our Dhandho journey?
All right, well, let's talk about how to actually put these principles into action.
Perfect.
And one of the big things I think is having that long-term vision. Patience is really key here.
Okay, so Dhandho investors, they're not really swayed by, the short term.
No, they're not watching the ticker every day.
Yeah.
They're focused on the long game.
Yeah.
They know that time is their greatest ally.
Okay. So it's all about, ignoring the noise, staying focused on your goals. And this is where the power of compounding really comes in. Even small gains, when compounded over time, can lead to like massive wealth creation.
It's that snowball effect, right?
Exactly.
Well,
the longer you let it roll, the bigger it gets. Imagine like you invest $10,000 and you earn like a 5% return every year.
Mm-hmm.
After 10 years, you'll have over $16,000.
Okay.
But if you keep it invested for another 10 years, you'll have over $26,000.
Wow.
That's compounding in action.
So it's really about letting those investments just,
grow patiently.
Grow patiently over time.
Yeah, reap the rewards of that consistent growth.
Okay. So that's why Dhandho tells you to avoid like trading too much or trying to time the market.
Right.
Because every time you buy or sell,
you lose a little bit to fees and commissions.
And you could miss out on those compounding gains.
Right. So the key is find those great businesses.
Yeah.
Invest at the right price.
Yeah.
And then let them grow.
Simple, but powerful.
Exactly.
This has been so insightful. I feel like I'm seeing the whole investing world in a new light.
I'm glad to hear that. Dhandho is a really powerful philosophy.
It is. It is. Okay, well, before we wrap up, I wanted to touch on one last point from the book.
Mm-hmm.
They talk about how while building wealth is important,
right,
it shouldn't be our only goal in life.
Yeah.
And the author really emphasizes the importance of giving back.
Absolutely.
Of making a positive impact on the world.
Wealth is a tool.
Yeah.
It's up to us to use it wisely.
It's about finding that balance between, financial success and living a life that's actually meaningful.
Well said. So what stood out to you the most from our deep dive into Dhandho so far?
That's a good question. I think for me, it's really the emphasis on patience and emotional discipline.
Yeah. That's a big one.
Because it's so easy to get caught up in the market, and make those impulsive decisions.
Absolutely. Emotions can really get in the way.
They can.
Yeah.
But Dhandho gives you this framework, to stay grounded, to think long term, to make those rational choices based on analysis, not, fear or greed.
Right.
And I'm also really fascinated by this whole idea of seeking out low-risk, high-uncertainty businesses.
It's a different way of looking at things.
It really is.
Yeah.
Okay, well, thank you so much for taking me through this Dhandho deep dive.
You're welcome.
I feel like I have a whole new toolbox of insights to use when I'm thinking about investing.
Excellent. And remember, the Dhandho Investor by Mohnish Pabrai.
Yeah.
It's a fantastic resource.
Definitely recommend checking it out.
Absolutely.
All right. And to our listeners, thanks for joining us on this deep dive into Dhandho investing. Hope you found it as enlightening and inspiring as I did.
I did too.
Happy investing.
Yeah. Happy investing, everyone. Yeah, it's all about putting these principles to work. And one of the biggest things is having that long-term vision. Like, patience is key for Dhandho investors.
Okay, so Dhandho investors, they're not really swayed by, the short-term market swings or anything.
No, they're not. They're not watching the ticker every day or anything like that. They're in it for the long haul.
Yeah, they're thinking long-term.
Exactly. They know that time is on their side.
Okay, so it's all about ignoring the noise and just staying focused.
Right, exactly. And that's where the power of compounding really comes in. Even small gains, when they're compounded over a long period, can lead to huge wealth creation.
Yeah, it's like that snowball effect, right?
Exactly. You start small, but it just keeps getting bigger and bigger as time goes on. Imagine you invest $10,000.
Okay.
And you're earning a modest 5% return each year. After 10 years, that'll grow to over $16,000.
Okay.
But keep it invested for another 10 years, and suddenly you're looking at over $26,000.
Wow. So it really adds up over time.
It really does. That's the magic of compounding.
So it's about letting your investments just grow patiently over time.
Yeah, exactly. Don't get tempted to constantly buy and sell or try to time the market.
Right, because every time you do that, you're losing a little bit to fees.
Exactly. And you could be missing out on those compounding gains.
Okay, that makes sense. So the key is to find those great companies, invest at the right price, and then just let them do their thing.
You got it. Simple, but incredibly effective.
This has been so eye-opening. I feel like I'm seeing the whole world of investing differently now.
I'm glad to hear that Dhandho is a really powerful philosophy.
It really is. And before we wrap up, I wanted to mention one more thing from the book.
Okay.
They talk about how, while building wealth is important,
right,
it shouldn't be our only focus in life.
Absolutely.
And the author really stresses giving back and making a positive impact on the world.
That's so important. Wealth is just a tool at the end of the day.
Yeah.
It's up to us to use it for good.
It's about finding that balance, between financial success and living a life that's meaningful.
Well said. So what's resonated with you the most from our dive into Dhandho so far?
That's a tough one. For me, it's the emphasis on patience and emotional discipline.
Yeah, those are big ones.
It's easy to get caught up in the market frenzy and make impulsive decisions.
Absolutely. Emotions can really cloud your judgment.
They really can.
Yeah.
But Dhandho provides a framework for staying grounded. Thinking long-term and making rational choices.
Right. Making decisions based on logic, not fear or greed.
Exactly. And I'm also really intrigued by the idea of seeking out those low-risk, high-uncertainty businesses.
Yeah, that's a unique aspect of Dhandho.
It really is. It's a whole different way of looking at things.
You're sure.
Okay, well, thank you so much for guiding me through this Dhandho journey.
You're very welcome.
I feel like I have a whole new set of tools and insights to apply to my own investing.
That's great to hear. And hey, don't forget, The Dhandho Investor by Mohnish Pabrai.
Yeah.
That book is a fantastic resource if you want to dive deeper into this approach.
Definitely recommend adding it to your reading list.
Absolutely.
And to our listeners, thanks for joining us on this deep dive into Dhandho investing. We hope you found it as enlightening as we have.
We did.
Happy investing, everyone.
Yes, happy investing. Yeah, it's really about putting all these principles into action, and one of the biggest things is having that long-term vision. Patience is key for Dhandho investors anyway.
Okay. So Dhandho investors, they're not really swayed by, short-term.
No, they're not. They're not watching the ticker every day, freaking out about little ups and downs.
Yeah.
They're in it for the long haul. They're not looking to get rich quick.
Yeah. They're thinking long-term.
Exactly. They know that time is on their side.
Okay. So it's all about ignoring the noise and staying focused.
Right, exactly. And that's where the power of compounding really comes in.
Yeah.
Even small gains, when they're compounded over a long period of time, can lead to like huge wealth creation.
Yeah, it's like that snowball effect,
yeah,
right?
Exactly. You start small, but it just keeps getting bigger and bigger as time goes on.
Right.
Imagine like you invest $10,000.
Okay.
And you're earning a modest like 5% return every year. After 10 years, that'll grow to over $16,000.
Right.
But keep it invested for another 10 years, and suddenly you're looking at like over $26,000.
Wow. So it really adds up.
It really does.
Over time.
Yeah, that's the magic of compounding.
So it's about letting those investments just grow patiently.
Yeah,
over time.
Yeah.
You don't get tempted to constantly buy and sell or try to time the market.
Right, because every time you do that, you're losing a little bit to fees, commissions.
Yeah, and you could be missing out on those compounding gains.
Right, exactly. So the key is find those great businesses.
Yeah.
Invest at the right price.
Yeah.
And then just let them grow.
Simple, but incredibly effective.
Exactly. You don't have to overthink it.
No, you don't. This whole deep dive has been so eye-opening. I feel like I'm seeing the whole world of investing differently now.
I'm glad to hear that. Dhandho's a really powerful philosophy.
It really is. It really is. And before we wrap up, I wanted to mention one more thing from the book.
Okay.
They talk about how, building wealth is important.
Right.
It shouldn't be our only focus in life.
Absolutely.
And the author, he really stresses giving back and making a positive impact on the world,
Yeah, that's so important. Wealth is just a tool at the end of the day. It's up to us to use it for good.
It's about finding that balance, between financial success and living a life that's actually meaningful.
Well said. Well said. So what's resonated with you the most from our dive into Dhandho so far?
That's a tough one. I think for me, it's the emphasis on patience and emotional discipline.
Yeah, those are big ones.
Because it's so easy to get caught up in that market frenzy and make those impulsive decisions that you regret later.
Absolutely. Emotions can really cloud your judgment when it comes to investing.
They really can.
Yeah.
But Dhandho provides a framework for staying grounded,
Yeah.
thinking long term and making rational choices.
Right. Making decisions based on logic, not fear or greed.
Exactly.
Right.
And I'm also really intrigued by this whole idea of seeking out those low-risk, high-uncertainty businesses.
Yeah, that's a unique aspect of Dhandho. It's not for everyone, but it can be very powerful.
It really is. It's a whole different way of looking at things.
For sure.
Okay. Well, thank you so much for guiding me through this Dhandho journey.
You're very welcome. It's been fun.
It has been. I feel like I have a whole new set of tools and insights to apply to my own investing.
That's great to hear. And hey, don't forget The Dhandho Investor by Mohnish Pabrai.
Yeah.
That book is a fantastic resource if you want to dive deeper into this approach. We've just scratched the surface here.
Yeah, we have. Definitely recommend adding it to your reading list.
Yeah.
And to our listeners, thanks for joining us on this deep dive into Dhandho investing. We hope you found it as enlightening and inspiring as we have.
I know I have.
Happy investing, everyone.
Yes, happy investing.